Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Widening war fears. President Trump meets with his national security team to discuss the Middle East conflict, fueling speculation the U.S. may join Israel's attacks on Iran. Meanwhile, the New York Times reports that Iran is preparing missiles for possible retaliatory strikes on U.S. bases should the United States get involved. The Fed is expected to hold rates steady, even as Trump argues for cuts. Investors will be focusing on an updated economic and rate projection. And today's big take, Trump is antagonizing foreign creditors when the U.S. needs them the most, threatening the dollar's reign, which may unleash a vicious cycle of currency and deficit concerns. It has just gone 8 a.m. across the Emirates. I'm Jumana Bersachi in Dubai. We are entering into the 6th day of hostilities between Iran and Israel. The real question at this point is whether the U.S. are looking to get involved militarily. A couple of posts that the president put up yesterday shook market sentiment once again, with the President Trump putting out a post on Truth Social saying Iran should surrender unconditionally, also talking about them knowing exactly where the supreme leader is hiding. So a threat coming through from the U.S. to Iran. On the back of that, we saw sentiment nosedive. S&P futures this morning trading slightly flat, marginally in the green, up 7 basis points. So we did close in the red yesterday. A big day coming up in terms of the Fed. We've got that meeting. No change expected on the interest rate, but clues will be looked for to determine the path of monetary policy ahead, coming at a time, of course, where there could be inflationary pressures building on back of the price action in oil. Take a look at where oil is trading today. That is not the price of oil, but oil is indeed up another 10% on the week. Yesterday at one point was up about 3.5%. Today we're seeing marginal movement towards the green as well. 30-year yields also 4.9% this morning, closely correlated to what has been happening to the price of oil. So it tells you that the spot commodity complex is having an impact on long-term inflation expectations. And then gold, as you can see, pulling back from those all-time highs. And then we have Brent, the current figures at just shy of $77, 0.4% higher. Switching over, I thought this chart was interesting as well because it just shows you that, first of all, shipping costs have really started to tick up around the region on back of concerns of disruption. Of course, there has not been any major disruption around the Strait of Hormuz. But look, daily ship crossings through the Strait of Hormuz have started to come down as the tankers reassess and look for alternative shipping routes at a time of great geopolitical anxiety. So very interesting to note that the tanker traffic has started to react as well. Now, President Trump has met with his national security team to discuss the Middle East conflict, fueling speculation the U.S. may join Israel's attacks on Iran. Before gathering with his advisors, Trump posted a demand for what he calls Iran's unconditional surrender and warned of a possible strike against Iran's supreme leader, saying he is, quote, an easy target. American weapons are seen as crucial to achieving a more complete destruction of the Islamic Republic's atomic program than anything Israel can do alone. Meanwhile, French President Macron is opposed to any actions that would destabilize the regime.
No to military actions aimed at regime change, because no one knows what comes next. Haven't we collectively seen the consequences this has had in the region and beyond? Does anyone think what was done in Iraq in 2003 was a good idea? Does anyone think that what was done in Libya last decade was a good idea? No.
It's a stance echoed by former CIA Deputy Intelligence Officer Glenn Carl, who spoke to us just moments ago.
One can't control 90 million people with multiple factions that are at each other's throats, or at least diverge even just a little bit. So Macron's assessment is correct. That said, unless the regime changes, the fundamental issue probably will not.
For more, we are joined by Stuart Livingstone-Wallace, our executive editor for MENA in Russia. I remember not so long ago, President Trump was in the region talking about getting the U.S. out of these quote-unquote forever wars in the Middle East. He's spoken about it on his first term, now second term. He has to make a big decision in the coming days as to whether the U.S. gets involved militarily. What are we hearing, Stuart? What do we know?
So I think at the moment we're still at the stage of he is exploring what options he has. And I think that, yes, ideally he would probably still like a diplomatic route. I mean, that was a fairly strong tweet, I think, that came out from him in terms of the unconditional surrender. But when you weigh that up against what he's doing militarily, in other words, the preparations that are underway, we know there's a carrier strike group in the Indo-Pacific, we know that there's other hardware being moved in. He has to give himself the option either to get the leverage in the talks or to actually do something. So I think that's the stage we're at now, but it's certainly not the sort of the great optimism we had a month ago.
What military assets does the U.S. currently have in the region?
So something around the order of 40,000 troops, more or less, and that's a fluid number. It's got a carrier strike group. It's got, I think, something like 3 cruise missile ships floating off the Eastern Med. It's got another carrier strike group in the Indo-Pacific that can move in, and of course, the one we all want to talk about, which is the B-2 bombers. Now, those are the ones that ultimately are going to deliver the kind of weaponry needed to break through at the nuclear sites. Now, they're stationed currently in the US, but we saw in October they were used against the Houthis very effectively in terms of very, very deep military assets. And I think that is the assumption this time round. If they're going to do it, it's going to have to be with those stealth bombers.
So perhaps the one thing to keep an eye on is the monitoring of the movements of those military assets to signal whether the U.S. are looking to get involved. What about the damage that the Israeli Air Force has inflicted on Iran? Because they talked about yesterday, claiming that they have full control of the skies. How much damage has actually been inflicted on the ground?
Yeah, so I mean, I think in terms of control of the skies, I think that's absolutely uncontroversial to say that. And I think everything we've seen over the last 6 days has proved categorically that they do have control. Having said that, in terms of the damage to the key sites, that is the nuclear sites, yes, it has happened. And if you think about the nuclear sites, in some respects, they're a supply chain. One is producing the gas, one then sends it into the centrifuges and so on down the chain. They have done significant damage, we think, to at least 2 of those sites, but that has not set back things forever. You know, at best, it's probably a few months, maybe a couple of years. And again, back to the bunker busters that we need from the US, I think, to really take it out on a permanent basis.
Stuart, how are Arab countries feeling about what is going on, the Gulf states? And we know that several condemnations have come through. There was a joint statement put out by Arab foreign ministers on Monday of this week. What is their assessment of the risk level at this point?
I mean, I think they are increasingly anxious, and you can understand why, right? This is right on their doorstep. And I think, by and large, there is unanimity amongst them that the way forward for the region is one of peace. You know, they are much more interested now in economic growth and economic prosperity. They are not so interested in war. And these are all leaders that have grown up with more or less endless wars. And you've seen a real change in their attitude in the last few years towards that. So I think great disappointment. I think great anxiousness as well. But to some extent, it's a little bit out of their hands. You know, ultimately, this is going to be a decision made in the White House.
Yeah, one man, and really difficult to ascertain what that one man is thinking. Stuart, thank you so much. Stuart Livingstone-Wallace, our executive editor for MENA and Russia. Now, at least 51 Palestinians have been killed and more than 200 wounded in the Gaza Strip while waiting for UN and commercial trucks to enter the territory with desperately needed food. AP reports that witnesses saw Israeli forces carry out an airstrike on a nearby home before opening fire towards the crowd in the southern city of Khan Yunis. The Israeli military says soldiers had spotted a gathering near an aid truck that was stuck in Khan Yunis. It has acknowledged several casualties as they opened fire on the approaching crowd and said authorities would investigate what happened. Now, sources say G7 leaders attempted and failed to move President Trump towards tougher sanctions on Russia while he was at the summit in Canada. Trump is said to have argued sanctions burden the U.S. financially. Bloomberg correspondent David Gura has more from Banff.
There was never going to be the kind of wide-ranging joint communique that we've seen at previous G7s at this summit, but there were more narrowly tailored joint statements on a variety of issues, on artificial intelligence and migrants and critical minerals. Today, leaders here at the G7 tried to carry on as normal without the President of the United States here. He left early to go back to Washington to monitor developments in the Middle East. And of course, the leaders here were paying attention to what's going on between Israel and Iran and Washington's response to it. But largely, they tried to carry on as normal following the official agenda, and today's focus was squarely on the conflict in Ukraine. Ukraine's President Volodymyr Zelensky is here in Canada. He met with Prime Minister Mark Carney at the start of the day, and Canada announced more financial support for Ukraine in its fight with Russia. Also announced new sanctions on Russia as well. There was cajoling last night at the dinner among these leaders, and they were able to convince President Trump to support a statement on the Middle East. They were unsuccessful, however, in getting him to sign on to a statement on Ukraine. Friedrich Merz, the Chancellor of Germany, was cautiously optimistic, as he put it, that Trump will come around and be in favor of applying more sanctions to Russia. That's something that President Trump has resisted, and the ball now is squarely in his court. David Gura, Bloomberg News.
Still ahead, hear why Shikhara Investment Management says the U.S. will slowly pivot away from tariff policies to focus more on deregulation and growth. More on their market strategy next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersechi in Dubai. The Fed is widely expected to hold rates today, with traders looking to Chair Jerome Powell for clues on what might eventually prompt policymakers to make a move. Joining us now is Rahul Chadha, the CIO and founder at Shikhara Investment Management. So let's talk about today. The Fed, nobody's expecting them to change interest rates or to actually start cutting interest rates. It's been several meetings in a row. What do you think would incentivize the FOMC to sound more dovish today at the meeting? There's already about 50 basis points priced in, and that's what the dots are projecting.
Yeah, so I think if we get statement from Fed alluding to that they've been kind of positively surprised by the inflation prints, the impact of tariffs has not been that much as feared on the inflation. And if we get sound bites on risks to employment being higher in the economy, I think that would make market more confident on a cut in September. So our view is that we get a 25 bips cut in September, and depending on then how the economy goes, basically either one more in December or something early next year.
Yeah, it's interesting that you're saying that the spot inflation prints have been moving in the right direction, actually surprising to the downside. You look at the latest core PCE figure, getting very close to 2%, which is where the Fed wants to see it. But further down the track, there is a real possibility of inflationary pressures popping up. You've got the oil price movements recently that's been tracking very closely with 30-year yields. You've also got the unknown impact of what these tariffs are going to do to the end consumer and final inflation numbers. So given that uncertainty, does it not make sense, therefore, for the Fed to continue the way they are and not to commit to any further easing?
So I think that's what Fed's been doing. So they've erred on the side of caution till now. They've been on hold for the last 6 months. But what one's got to also understand is, look, the money supply growth somewhere slowed down in mid of last year. You had a lot of preemption of demand because I live in US, and from November onwards, all these business in USs were kind of forewarning their consumers about tariffs leading to higher price increases. So there was a fair bit of a restocking which happened. So what you're going to see is some bit of a demand going slower here. And I think that kind of a translates into lower prices because corporates are absorbing part of this pressure. Some of the pressure on tariffs are being absorbed by the suppliers, etc. So which is why we've not seen as much increase in prices as one feared. And also there's a fair bit of a slack coming through in white-collar employment. Still early days because of AI having impact over there, but you're getting early signs of some bit of a slack coming in that employment.
As far as markets are concerned, we've seen a recovery since the lows we got to in April. Though we've got that July 9 tariff deadline coming up, the 90-day pause comes to an end. In this period, you can't say that there's been a lot of progress on trade deals. It seems as though the U.S. has really only had success with the UK, a bare bones trade deal, but limited progress with China, limited progress with the EU. Japan discussions have stalled. Are investors being too complacent about the possibility of the U.S. to actually ink deals with trading partners?
Yeah, I think we all realize that these trade deals don't happen overnight. They take longer than, 3 months, basically. And what the noise from the administration on reciprocal tariffs was to agree to a broad framework. What we're going to see here is a lot of these trade deals getting pushed out, something which we've seen on a different note with TikTok, the 90-day extensions coming through, a rolling 90-day extensions. Our view is back off of this year is going to be about deregulation. It's all going to be about kickstarting investment-led growth in the US. And I think that's why we've been constructive on the markets. We've used pullback to add to our exposure. Our view was that post-GFC, there's been a huge underinvestment in the US, same thing in Europe. That gets corrected as US builds local capacities. And I think that's a big positive. Whereas China curtails on this huge overinvestment and boosts consumption.
How are you thinking about the tax bill from an investment standpoint? Because on one hand, you could say that it's unnecessarily adding to the overall debt and deficit outlook to the United States, contributing to what's estimated to be like $2 trillion over the next 5-10 years. But then on the other hand, you could argue as well that some of the measures could be positive for corporates from a tax perspective. So how do you weigh the two together, the fiscal risk versus what it means in terms of bottom line for many of these organizations?
Absolutely. So the basic underline here is that strong nominal GDP growth takes care of it. And this incentivizes the businesses to invest in the economy, and consequently you have higher growth, and that lowers the deficit. But should that not happen, we'll see bond markets getting spooked. And I think that's the risk for equity markets also, that do these bond yields spike up and then they go beyond that 5% level where they become a constraint for global growth, and they become the tail risk for the markets.
Final question. Let me just round it up by bringing it back to the situation in the Middle East, the hostilities between Iran and Israel. Should the U.S. decide to get involved militarily, how would markets react?
So I think a lot depends on whether it just remains that localized conflict. And when I say localized, it's between...
Bilateral.
Yeah, bilateral. And it doesn't extend to the rest of the Middle East. Look, we've been in Dubai last 4-5 days, and it's life as usual here. So if you're outside the region, it seems like the whole region is in flames, but it's a very bilateral conflict basically here. And as long as it remains there, I think markets would kind of go as usual. But look, if it becomes a prolonged conflict and it risks drawing in more regional countries into it, then markets will be worried about that.
Yeah, absolutely. Okay, Rahul Chadha, thank you so much for joining, CIO and founder at Shikhara Investment Management. And coming up, Mali takes control of a large Barrick Gold mine after a court ruling against the company. That's next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. A Malian court has ruled Barrick Mining's Lulu Gonoto gold operation should be placed under provisional administration for 6 months. It hands control of one of the Canadian company's biggest mines to state-appointed management. Joining us now is Bloomberg's William Close. So this story has been going on for almost a couple of years now. Well, what happens next? Barrick saying, obviously, that the transfer is unlawful.
Yeah, good morning. So the court ruling issued on Monday is, as you say, the latest step in a dispute that has been rolling since 2023, with Mali trying to get more money and a greater share of proceeds out of the gold mines in its country. Now, this new decision to put the mine Loulo-Gounkoto in administration for 6 months follows other measures taken by Mali, such as blocking the export of gold at Barrick's mines, arresting some employees, and seizing several tons of gold. And these measures saw Barrick actually suspend operations at the mine earlier in the year. What Barrick is doing to fight back, among other things, is pursuing international arbitration. in an effort to protect its rights and stop the Malian government doing these kind of things. But for now, at least, Mali's government doesn't seem to be especially concerned by the arbitration and rather seems to be ploughing ahead with these efforts to take over management of the mine and resume operations.
And where does it leave the company? Where does this all leave Barrick? They're contesting it, but what is the end result for them?
It's a really major problem for Barrick, which is the second biggest gold producer in the world, but may soon be down to number 3. It's a really large operation. It produced more than 720,000 ounces of gold last year, which made it the second biggest source of both volume and income to Barrick's portfolio. So it's hard to understate how significant an asset this is for them. Basically, this leaves one of their key assets stranded at a time of all-time high gold prices, and therefore Barrick is unable to fully capitalize on this record-breaking rally by gold. The sort of glimmer of hope for Barrick is that the owners of the other 3 largest gold mines in Mali have, unlike Barrick, been able to negotiate these financial settlements with the Malian government that have sort of seen them carry on normal operations in the country. So it is possible. And Barrick has said, despite the extent to which relations have soured between the parties, it would still like to negotiate a mutually acceptable outcome with the Malian government.
Bloomberg's William Close, thank you for getting us up to speed on this story. Now for a look at some of the other stories we're following this morning as well. The European Union is refusing to hold an economic meeting with China, blaming a lack of progress on trade disputes. Such a meeting typically lays the groundwork for a leaders' summit, but a source says it's been scrapped, along with a digital dialogue that was expected in the coming weeks. Fresh tensions have flared in recent weeks over China's decision to put export curbs on rare earth metals vital to Europe's auto industry. 2 U.S. toy companies are asking the Supreme Court to consider striking down many of President Trump's tariffs. They are seeking an expedited ruling on the case, possibly by the end of the year. Learning Resources and Hand to Mind want the court to decide immediately whether the president can actually impose tariffs using the International Emergency Economic Powers Act. And just bringing you some latest headlines that are coming through from the region. IDF have said that they have attacked uranium centrifuge production site. Unclear at this point the timing or the location, but the attacks on those nuclear facilities and Iran's military and defense capabilities continue with no signs of things letting up. This is your market read. Things are trading sideways. Yesterday, we did see a bit of a dip in sentiment after several posts that the president put up calling for an unconditional surrender out of Iran. Now, coming up, we are going to be watching how oil markets are moving following President Trump's call for that unconditional surrender from Iran and the proposition that the U.S. may join Israel with the attacks on Iran. So more in our top story next. This is Bloomberg. Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Widening war fears. President Trump meets with his national security team to discuss the Middle East conflict, fueling speculation the U.S. may join Israel's attacks on Iran. Meanwhile, the New York Times reports that Iran is preparing missiles for possible retaliatory strikes on U.S. bases should the United States get involved. The Fed is expected to hold rates steady even as Trump argues for cuts. Investors will be focusing on updated economic and rate projections. And today's big take, Trump is antagonizing foreign creditors when the U.S. needs them most, threatening the dollar's reign, which may unleash a vicious cycle of currency and deficit concerns. It has just gone 8:30 a.m. across the Emirates. I'm Jumana Bersachi in Dubai. Sixth day of hostilities between Iran and Israel. The big question at this point is whether the U.S. decides to get involved militarily, a topic that is unclear for those close to the situation, even those in the region as well. But what it would mark would be yet another escalation should the U.S. decide to go down that route. Some nervousness in markets prevailing yesterday. We saw a close in the negative, in the red for some of those major Wall Street indices, S&P and NASDAQ closing in negative territory. Today, you can see that we are basically trading sideways, but the other big attention for market investors is going to be on that Fed meeting. No rate change expected today, but the market will be looking out for those economic projections and whether there will be a change in the dots, i.e. what the median forecast is in terms of rate cut expectations for the rest of the year. There's about 50 basis points of rate cuts priced in. Will that move upwards on back of some of the recent inflationary pressures? Speaking of, this is where Brent is trading this morning. So we're up yet another 0.5% as we talk about the geopolitical situation in the region. At some point yesterday, oil was up 3.5%. We've pulled back, but still up about 10% over the course of the week. 30-year yields tracking the price of oil very closely. I thought that's been interesting over the past week. Correlation between yields and oil has been quite high. 4.9% is where we're at. And then gold pulling back from close to record highs, 3,500 thereabouts, still up about 0.2% as money continues to go into those safe havens and areas of perhaps relative safety in times of great geopolitical uncertainty. Switching over, I also just want to flag to you, this I thought was interesting just in terms of the amount of traffic that is going through the Strait of Hormuz. No surprise here, but traffic has come down in the past couple of days. And then the cost of shipping fuels from the Middle East to East Asia has climbed almost 20% in 3 sessions. So it tells you that not only is the traffic slowing down, but prices and costs to ship through the region and through the Strait of Hormuz, the Arabian Gulf, all of that has gone up in the last couple of days in response to the hostilities. Well, speaking of oil, the IEA expects global oil markets to remain comfortably supplied this year, provided that there are no severe disruptions to Middle East crude flows. Executive Director Fatih Birol says the outlook may change if the Strait of Hormuz is closed due to the conflict between Israel and Iran.
There are many uncertainties whether or not another party will be involved in this the conflict in Middle East or not, whether or not always the question, the Strait of Hormuz, which is very important, is going to be closed for some time or a longer time. These are all questions on the table because, as we all know, Strait of Hormuz is extremely important for the global oil and LNG trade.
We also heard from industry chiefs at the Japan Energy Summit. They're monitoring the war between Israel and Iran and the impact on energy markets.
Well, obviously, we're all watching very closely to understand what does this mean for the flow of energy to customers around the world, particularly the 20% or so of global oil and LNG that transits through the Strait of Hormuz.
Middle East consists 25% of global LNG supply. We now, as for Jazeera, the 10% coming out from Hormuz Strait. It's not huge, though. Take into account our small inventory, the impact is huge. And we're closely watching the development in Middle East.
Again, it's difficult to anticipate what the market will be. Our duty is to be able to have alternatives and to provide energy to our customers, reliable one and affordable one.
Joining us now to discuss the geopolitical situation in the region is Ayham Kamel, Edelman Public and Government Affairs Middle East President. Ayham, good to have you with us on the show. A couple of posts that President Trump put up yesterday caught a lot of attention, not only because of the substance of the post, but also because he used the word we, implying that the U.S. is somehow already involved in the Israel airstrikes and attacks on Iran. What is your assessment of the likelihood for the U.S. to be actively participating militarily in this campaign against Iran in the coming days?
Thank you, Jumana. I think President Trump is likely to view an opportunity really to carry on or to benefit from the success of the Israeli campaign or Israeli strikes against Iran's leadership, nuclear program, military facilities, and infrastructure. So he is riding the wave here. He's seen very little in terms of a response that is effective from the Iranian leadership. And he's trying to capture some of that. I think that there is a sort of a contradiction over here. Trump does want to stay out of a war directly, but he wants credit for the successes that Israel is achieving on the ground in Iran.
What would be the justification for the U.S. to get involved in the war, especially in light of the U.S.'s own Director of National Intelligence testifying to Congress in March of this year that Iran does not have or is not close to building a nuclear weapon, even though it is sitting on a significant amount of stockpiles? How can the U.S. then decide to opt for military action in the absence of the briefing from its own intelligence?
I think what you're seeing here, Jumana, is that President Trump is acting on the basis of his own convictions. He rarely consults on these issues. He sees that there's an opportunity to politically benefit. So the primary angle here is political. If you notice, his position in the first initial days was a lot more reserved, as in, this is Israeli action, the United States is not involved and does not seek to get involved unless Iran attacks U.S. bases or U.S. personnel. That position is incrementally shifting. And I think the meeting of the National Security Council, President Trump's own tweets on X, I think what you're seeing here is a president that sees an opportunity to gain more from getting closer to Israel's actions. Fundamentally, though, Jumana, despite the success of the Israeli military strategy, the big question here is where to go from here. How can you eliminate Iran's nuclear program without having forces on the ground? And what happens to stability in Iran? This is a country of 90 million plus. Potentially, there's a gap here between the U.S. and Israel on what happens next. Trump is interested in a quick political win, disarmament of Iran or elimination of all enrichment activity, while BBC's in Israel sees a golden opportunity here to do more to weaken the Islamic Republic.
Yeah, well, you say that President Trump senses an opportunity because the Iranian regime clearly have faced multiple setbacks over the course of the last few days, and even in the run-up to this via the weakening of their proxies around the region. But what would it mean for regional security and stability and for the relationship between the U.S. and its important allies in the region? Remember, he was just here in the region ago talking about the success of the Gulf states. Should the U.S. decide to get involved militarily?
Well, I think that the Gulf states will be talking behind closed doors. All the leaders between Saudi Arabia, the UAE, and others will be encouraging President Trump to be very careful in terms of direct involvement. They do not want their countries to be subject to an attack. Saudi Arabia has been working intensively on Vision 2030 to create stability. The UAE has one of the most conducive hubs for trade and investment in the world. So I think that they would want a more cautious approach when it comes to direct U.S. involvement. And I would imagine that that's the conversation that's happening behind closed doors. The Gulf countries have their own really strategy in terms of rapprochement with Iran. They've tried to stay out of this conflict, and I think that they will be determined to stay on the sidelines. U.S. involvement would compromise the entirety of that strategy. So I think you have a split here. The Gulf countries do want more caution, while Israel sees a really great opportunity to push the Iranian regime into becoming not a real security threat to the state of Israel. That's been a campaign waged over months, Jumana, as you pointed out there, from the assassinations over the last 12 months, attacks on Iran. All of that has been to weaken Iran strategically.
Okay, Ayham, what if the U.S. don't get involved militarily? Where does the off-ramp come from? As you mentioned, the Israeli Prime Minister Benjamin Netanyahu is on a mission to destroy his quote-unquote enemy. No signs of relenting anytime soon. And the Iranian regime, even though weakened, are not out. They're still very much dominant and present as a political force within Iran. So then where would the off-ramp come from?
Jumana, the off-ramp can come diplomatically at a later stage. I think this conflict will expand and will take longer in terms of escalation before it de-escalates. And that could come really when the Iranian leadership is a lot more exhausted. The attacks on military targets, leadership, critical infrastructure begin to create more pain for the Iranian leadership. Clearly, the Israelis have a very good idea in terms of the intelligence services, where the Iranian leadership is and how it is organized. So the command and control center in Iran has been damaged as a result of this. The off-ramp comes when the Iranians feel that they're too tired, when the U.S. potentially presses on Israel to end the strikes and settle for the achievements, or perhaps when the Iranians accept that there will be really no enrichment, a nuclear program, but no enrichment on Iranian soil. It's a game of perseverance primarily for the Iranian regime to retain as much as it could in terms of nuclear program, or really the fate of the regime itself.
Yeah, and that is a good place to leave it. Ayham Kamel, really good to talk to you today. Edelman, Public and Government Affairs Middle East President. And coming up, President Trump's economic agenda drags down the dollar, adding to U.S. uncertainty. That is the focus of today's Big Take. Up next, this is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. President Trump's economic agenda has dragged down the dollar, making it more difficult for the U.S. to finance its deficits. The consensus analyst forecast is now for the greenback to steadily fall against the other G10 currencies over the next several years. That is the focus of today's Big Take, and senior reporter Ruth Carson joins us to discuss the Big Take, which is up on the terminal. A great read. I read it this morning. So we have been on the show tracking the weakness of the USD over the course of this year, and I guess the question that people is asking is whether this is just a temporary pullback in relation to the uncertainty surrounding economic policies stemming from the U.S., or is it a structural retrenchment and a real diversification play away from the USD that's taking place?
Jumana, that's the multi-trillion-dollar question that everyone is indeed trying to answer. If history is any guide, definitely brace for more greenback weakness ahead. Just take a look at how the dollar's performed since President Donald Trump took office. 10% down versus the euro, the pound, the Swiss franc, and down against every major currency in the world. Definitely the consensus trade, whether you're in Tokyo, Singapore, or Hong Kong, or New York, is indeed bearish dollar positions. So definitely watch this space. It is a $7.5 trillion a day market after all, and overwhelmingly people are expecting dollar weakness ahead.
Yeah, and there's something that you talk about in the Big Take, this concept of a vicious cycle. A weaker USD obviously could be inflationary, could expand the deficits even further. What is the potential for this vicious cycle to kick in terms of amplifying the weakness that we're already seeing in this market?
Another great question, very much so in focus, is the Sell America trade. And as you correctly pointed out, is there a risk of a vicious cycle? We have seen pockets of explosions, particularly in Asia. For example, the Taiwan dollar last month surging, South Korean won surging as well. Now, these aren't just moving in isolation. These incidents have, really rocked financial markets as a whole and will have impact on the U.S. economy. because after all, global trade is global trade for a reason. So as the trade war intensifies, and the U.S. deficit situation doesn't improve, this will definitely be an area of focus where we could see a lot more stress ahead.
Okay, so then the question becomes, what is the viable alternative to the USD? A lot of uncertainty still about the European growth prospects. We've seen money pour into gold. Even Bitcoin was at one point pitched as an alternative to the USD, but it doesn't obviously enjoy the same characteristics of safety and being a reliable medium of exchange. So where does the money go if it's not in the dollar?
It's another great question, and believe it or not, it is something that I debate with traders, fund managers, and strategists virtually every single day from Singapore. What is the alternative to the dollar? Now, if we take a look at the breakdowns, gold is definitely one that has been touted as a potential alternative. You've also got euro, the second most traded currency in the world, and yen as another. But how viable they are as a true alternative when you consider that a dollar is at 88% of all trades in the world. It's certainly up for debate. People are certainly hunting for alternatives. Whether or not that Titanic moves from the dollar remains to be seen.
Ruth, excellent reporting. Thank you so much for running us through some of the key elements of today's Big Take. Bloomberg's Ruth Carson in Singapore. And coming up, a rush of hedge funds head to the UAE as star traders look to relocate to the region. That's next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Hedge fund traders have been pouring into Dubai and Abu Dhabi, lured by zero personal income tax, a time zone that talks to both East and West, and a lifestyle tailor-made for the rich. Many traders have been demanding to relocate. Bloomberg's Hema Parmar joins me now. So you and the team have been tracking all of these hedge funds that have been moving to the region, Dubai, Abu Dhabi, and other financial centers around the region as well. Yes. What has been the allure? Is it a business decision that's been taken by these hedge funds, or is it that the talent, i.e. the traders, the portfolio managers, they've been pushing for a lifestyle change?
Yes, the talent has been a powerful voice when you look at this trend of all of the biggest hedge funds really setting up shop in this region. They're keen to take benefit of the zero tax situation. They're keen to live in an environment that allows them to trade across many regions, the quality of life. And so we're seeing really the voice of the PMs and employees being the key reason why so many firms began setting up shop in this region, and then more floods of talent wanted to move. And so we're seeing that office space really grow.
Yeah, the ecosystem is beginning to build up. Mm-hmm. Which countries are they coming from?
Yeah, so London is a big draw. You're seeing people come from the UK, and a few reasons. The taxes have become quite onerous for people there. So you're seeing that be one of the key reasons why, especially Brits are looking to move here. That, in addition to the safety issues, some people have felt that the crime has been worse there, and then compared to the region here, it's incredibly safe. So I would say those are the two biggest motivating factors, and the UK does seem to be the space where we're seeing the most talent move here, in addition to Asia.
Yeah, in your report, I thought it was interesting. Of the 146 nationalities who work in the DIFC, Indians are also the largest contingent.
Yes.
So there's also been a big move out of the Indian community to move to the region as well. Would you say that there is so much competition that it's going to be difficult for all of these funds to tap into the wealth provided by some of these sovereign wealth funds and the family offices in the region?
Yes, so, fundraising is a big draw to being here, having access to the sovereign wealths, having access to the family offices. The process of fundraising is a little bit different here than it is elsewhere. It does take a lot longer. When it comes to hedge funds, sometimes there can be a little bit more reticence amongst family offices to invest in that space. That said, the biggest sovereign wealth funds are here. They're institutional, and it can take up to a year to secure a ticket. And one thing that the local family offices look for and the sovereign wealth is presence. investing in the region, having office space. So those things can help that case.
Interesting. Okay, well, us at Bloomberg, we're hosting a hedge fund forum today in Dubai. What can we expect? What's on the agenda for today?
Yes, so it is our first Middle Eastern hedge fund forum. We've had this in New York and also in London. And we're going to be tackling a lot of the issues we talked about here, a lot of these trends. The flood of talent. What do allocators really want? We're going to hear from GPs and LPs. And I think we're going to hear some really interesting insights about what lies ahead for this region.
Yeah, especially in light of the the recent geopolitical flaring up of tensions. And actually, just on that point, do you have a sense that what has happened the last couple of days could derail some of these flows to the region?
We asked one of the recruiters this question, and he said that, it can impact sentiment a little bit, but it's not something that they think will derail. It's compared to the draws of the region, he doesn't expect that it will be a significant factor.
Yeah. Okay. Bloomberg's Hema Parmar, great to have you on the show. And of course, we are hosting that Bloomberg Hedge Fund Forum later today in Dubai. So we'll keep you up to speed on any of the major headlines that come out of that conference. All right, let's take a look at markets, how we're faring into this big Fed day. It's not just about geopolitical risk in the region. We also have a big FOMC meeting coming up later today. No change expected on the rate cut side, but the economic projections, the rate cut projections are going to be looked for, gleaned at very, very closely to ascertain where we go from here and whether the Fed actually will continue to sound relatively relaxed about the outlook given the uncertainties, or whether they may use this as an opportunity to reaffirm what is priced in, which is about 50 basis points of rate cuts from now until the end of the year. So this is where we're tracking right now. Wall Street leaning towards the green, European markets leaning towards the red, down 0.3%. But that is it for Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Stay with us for Daybreak Europe. This is Bloomberg.